Hey Nancy, how's it going?
Hi, Cindy. It's going great. How are you?
See you again.
I know. I'm excited to get
Yay, awesome. It's
this.
2017 now, and 2016 ended up being really good. Good last 6 months for me. And,
Great.
I got all my calculations together with my income, some of my expenses. I'm sure a lot of people who are watching this have perhaps done the same thing. Hopefully they have counted it for 2016. So,
Well, thankfully, we're in the early part of the year, and there's time to gather up all that information and put it quickly into something so that you can move on. Because it's a real eye opener. I think once you start to track your income and expenses, you'll get to see, oh, okay, I can make this adjustment and I can make this adjustment, and actually sometimes those small little adjustments actually make big results, end up in
right.
big results. So yeah.
Awesome. Great.
Yeah.
Yeah. So what I'm curious about is like say, okay, now it's 2017, still the beginning of the year. I have everything calculated from last year. So what do I do next? I mean, what do I do with all those numbers and what can I do now to prepare myself for this?
Yeah. Well, have you, when you say you got them all calculated, did you like group all your expenses together, or how did you?
So
Um,
normally I group my expenses through like say, okay, gas, food for work,
uh-huh.
what else? Internet, any supplies, things like that. So that's
Okay.
how I group my expenses together.
Okay. All right. And so, and I imagine that you're a sole proprietor, right?
Yeah.
You're like, you've never incorporated yet and stuff like that. So there are a few things that you'll need to know, because as a sole proprietor, some of those categories are a little bit more restrictive. Some are not as restrictive as a S corporation or C corporation.
Okay.
So maybe if I can show you like what I would do in the case if I didn't have accounting software, this is the fastest way to tabulate your income and expenses, okay? But
Okay. Sounds
first,
good.
I'm going to share my screen with you, okay? And I'm going to show you one of the things first. We'll talk about a Schedule C, a 1040, and I'll show you the different categories. And then in my Wealth Builders Inner Circle, that private Facebook group that I have, I'm going to post the 1040 Schedule C in there, because it has a breakdown of all the different categories, okay,
Okay.
of
Cool.
all the expenses, because then you'll know exactly which ones apply to you and which ones don't.
Right.
And then you can total them. Okay, so here's, let's see, ask to share screen. Let's see, share screen. Okay, are you seeing my screen?
Yep. I see your screen.
Okay, all right, so here, this is actually a picture of your 1040, okay? And your tax preparer is going to help you fill in most of the stuff at the top, okay? The stuff that is going to matter for you is here in this box one, which is all your gross receipts or sales, okay? Gross receipts means everything, okay? But it only applies to your business part, okay?
Hmm.
So um, you don't have to track and separate them here, but I'm going to show you a technique where I think it would be valuable for you to be able to track your income as well, because ultimately, as you grow your business, you're going to want to know, where did my income come from? Okay?
Right.
But here is where all of the expenses are. Okay? And there's more. If you look at this line, it says
Mm.
other expenses.
Okay.
These are ones that are mainly typical to your industry. Okay, so
Okay.
say like a coach is not going to have the same kind of expenses as a restaurant,
Right.
okay, or as a manufacturing company or as a retail store. There are different expenses that you're going to incur. But
Okay.
these are general expenses that every business has. And so that's why they've put them in these, they have these categories already, right?
Okay.
So let's go like advertising. Sometimes people say, well, what does advertising consist of,
Right.
right? So it could even be like, say you go in and get imprints on mouse pads with your company name on them, okay? those are actually part of your advertising. Okay.
Mouse
But yeah, you could, or sometimes, well, sometimes people will post them they'll put them into printing. But you're actually, when you buy something like that, mouse pads, and you're going to actually give it away,
Uh-huh.
right? It's like advertising, right?
Oh, yeah. Promotional
Okay, so
material.
yes,
Yeah.
exactly. So sometimes it's like, okay, well, what category does it go in? You know, I mean, there's things that you can't go wrong, but what you don't want to do is end up with 150 categories because I didn't know where to put them, right? So
Right.
like your internet and telephone and cable can all go under, you know, like the internet, right?
Mm,
Or the telephone, right? Your cell phone and your landline can go under telephone. Your fax line can go under telephone.
right.
So, so there's a lot of things that you can group within that category. Okay, it's just like an overall broad thing, but if you think about it, it's like where would be the most likely a category that I could put them into. Okay,
Right.
so your car and truck expenses. Now that's a tricky one
Right.
because a lot of times people want to deduct all their mileage, but you can't. Okay, and the mileage, there's two ways of tracking your car expenses. So you can either buy your car and deduct the interest on the car
Okay.
and pay for the maintenance, or else you can take a standard mileage rate.
Okay.
Okay. Now the standard mileage rate for this let's see, for 2017, it was, I think it was like 53 and a half cents a mile.
Wow. Okay.
Okay. So like you can say, okay, am I going to track my miles? And if I track my miles, then I'll get my 53 and a half cents a mile. Okay. If I use my car and truck expenses to the actual, then I can depreciate the vehicle. Now, here's the thing. If you don't use it 100%, you need to track it really carefully. So they're going to ask you how much is personal miles, how much is business miles, even if you choose to buy the car and depreciate it. Okay.
Okay.
Because if you don't use if you don't use your car for more than 50% of your business,
Okay.
it comes under real scrutiny with the IRS. So you don't want to take too much of those. You want to track those and log them carefully.
Okay.
That's one of the things, the highest audited area of a Schedule C is your auto expenses and your meals and entertainment.
Okay.
Okay. So that is, you know, and if you have questions, like you can always ask me more in detail on that Wealth Builders Inner Circle, because that's where I'm going to start posting a lot of activity, answering questions, and helping entrepreneurs. Okay.
Okay.
All right. So let's go to commissions and fees. Now, commissions and fees. So say like you decide to hire somebody to help you, right? And you say like, I'm going to pay you a referral fee. If you bring me a customer, I'm going to pay you a referral fee. This is where
Right.
the information would go. Okay. Now, under these, when you pay somebody a referral fee, if you pay them over $600, now you have to issue them a 1099. Okay. That means a 1099 is for somebody who's a subcontractor to you.
Okay.
They're working for you. They're not an employee, but they're helping you in your business.
So wait, so somebody that's under me that's helping my business.
Well, yeah, well, not necessarily under
Oh,
you. So say like you hire a virtual assistant
okay. Oh,
and
right,
you
right,
and
right.
you pay your virtual assistant over $600,
Mm-hmm.
she would get put in there or in the contract labor, actually in the contract labor. But if you paid somebody a commission for a referral, you would have to pay them. It would be in line 10.
Okay,
But
so this
you
is
would,
not commissions and fees coming that I'm getting. This is what I'm paying out.
right,
Okay,
right.
got
But you
it.
would still have to issue them a 1099.
Okay, got it.
Okay. All right. And then, okay, so here's the contract labor. Like I said, this is for if you hire somebody that's not an employee, that you just hire somebody to do a project or, you know, like if you do the event planning for something and the event planner that you have somebody else come in and help you, right? But she's not your employee and you pay her to help you work that one day at an event, you would put her under this contract labor.
Right.
Okay. All right. And then we can go down to the depreciation is basically all of your assets that you buy. So like your computer, your printer, your fax machine, or your copier, your whatever else that you use, even for like cameras, your cell phones, all of that stuff is supposed to be actually depreciated.
Okay.
So you would keep track of those. Employee benefit program, I'll kind of skip over because that's for companies that have larger, that have multiple employees where they actually pay for their health insurance and things like that. Okay. Then the insurance, which is other than health. So you're going to have like a basic policy, or you might have to have, say like you sell a product. You have to have product insurance, product liability insurance.
Oh, wow.
Yeah, so those are some things that people overlook, but they don't realize that, oh, I needed to have a product liability insurance, or what other kinds of insurance? There's, your, say your technology, like, do you know how how do I describe it? Like if you have a theft, like with your computers, or you have something where it destroys your computer data and you have to restore it, right? If you had insurance like on that, you would put it in here in this category. So those are some of the extra insurances, because it's not always just regular, home insurance or car insurance or anything like that. It's all of these other business insurance policies that you'd have. So, for every small business, they should actually have a business policy, because you never know. Like even for me, I work out of my home.
Right.
So I have to have a business policy to cover my home. Like if people come into my home and they trip, I have insurance for coverage on that.
Right.
Or if I have a loss of data, I have, provision in my policy where they'll help restore it, and it'll be covered. Okay.
Okay.
Then we've got the interest, which is normally just the interest on the business. If you borrowed a loan or whatever, you can deduct that interest on there. Okay. Even if you pay, say for example, you charge stuff on your credit card, and the credit card interest that you pay, just the credit card interest for the stuff that you purchased on your business is deductible there. So normally credit card interest is not deductible, but in the case of a business, it is.
Right.
Okay. Then the mortgage, what they've got here, we'll cover that, but this is if you had a business loan. But this is, I'll cover a little bit more later, because I'm going to talk about having a home office and what you can deduct there.
Okay.
All right. And then basically your legal and professional, which is attorneys and accountants and other people that you would hire as professionals, you can put there. You also have to issue them 1099s. So anything where you have a service industry that you had to pay somebody in excess of $600, you want to make sure that they get a 1099. Because if you don't issue a 1099 to this person, it's going to be really hard for you to deduct it on your business.
Right. Okay.
Okay. So, all right. And then we'll go here. I'm going to move our little screen here.
So the 1099 is you give it to them based on what amount?
It's based on what you paid them, but anything in excess of $600. So
$600. Okay.
$600 is the threshold.
Okay.
Okay. So I'll give you an example of some other things that you would need to issue 1099s for in a little bit. Okay.
Okay.
So this office expense, that's typical your office supplies and whatever else that you need to operate your office. Okay. Then you've got your pension and profit sharing. Most people don't have these because they're larger Schedule Cs, but you can do this for for your employees.
Okay.
But as a sole proprietor, if it's just you, you wouldn't get to deduct that.
Right.
Okay. Okay. Then the rents. Now you can pay for the rental of, your office space. Okay. And this is the more advanced tax planning stuff that I do with my clients, because when you're a sole proprietor, you can't rent from yourself. But I'll show you the options that you could do later on if you had your own home, and how it would really helps when you get a home and then you have a S corporation or a C corporation, and then you operate out of your home.
Right.
And then you get like more deductions. Okay.
Okay.
Okay. So repairs and maintenance. This is really repairs and maintenance on your equipment and stuff, not on your home. Okay. So it's anything that you have to pay for to fix your machinery or whatever. Supplies. All these are like all kinds of supplies, because you can have computer supplies, you can have like trade show supplies, say like if you were like a repair guy that does that has like little nuts and bolts and stuff like that, and you're not going to track all of those, you would just put them into this category as supplies, because they're going to use them and repurchase them quite often. Okay. Okay. And then your taxes and license. Now on these taxes and license, your federal income tax is not deductible, but your state income tax is. So anytime you have to pay, and then like your business license, like any fees that you have to pay to operate your business, you can put under there. But this section is like for if you have employees as well.
Okay.
All right. Now here, this is the travel, meals, and entertainment. And this one can get tricky. You have to like think about what you're doing. Okay. So the rule is when you're traveling away from home, okay, everything that you have to spend on while you're away from home, like where you couldn't go back to your home just easily, is all treated as travel. So say like you go to New York City, you live in San Francisco, you go to New York City to do work, right? So all of the stuff that you would pay for to go to New York City is all considered travel.
Okay.
So even if you eat out, and even, you have to rent a car, you have to pay for parking, you have to pay, all of that is considered travel.
Okay.
Okay. But say you go to San Jose for a conference for the day.
Okay.
Okay. So that now is considered auto mileage. Okay. Not travel, but now it's considered auto mileage. And the meals that you eat there, the meal that you would eat during the conference time,
okay,
treated as travel, right? But say, example, you decide to go out to dinner with one of your colleagues, and you go out to dinner after the conference is over. Now that's considered meals and entertainment.
Okay.
Okay. So it depends on when you go travel, like, are you able to go back home right away, or who are you meeting with, right?
Right.
So that's a distinguish, because that's important. The reason is that in the meals and entertainment and your auto deductions, you're limited on what you can deduct. If it's travel, you get to deduct 100%. If it's meals and entertainment, you only get to deduct 50%.
Oh, wow. Okay. So what do you mean by deduct 50%? I just take 50% of what I spent on meals and entertainment?
Yeah.
Okay.
Yeah. But you would record the whole entire amount. Your tax preparer knows if you categorize it as meals and entertainment that he can only take 50%.
Okay,
but if you categorized it as travel, then he takes 100%.
Okay, got it.
Okay?
Okay.
All right. So then utilities. Now this is only going to happen, like I said, if you were, say you were a sole proprietor and you had your office out, not in your home, but outside. Okay, so you would end up paying utilities. Those are deducted there.
Okay.
if you have your home office, I'm going to show you how to deduct those in a different place, okay? And then these are wages. Okay, and so say like the other expenses. Say like you're in a coaching program and you're taking your coaching program, and you're already a coach, right? Or say like you're learning about Facebook advertising and you already do those things. Well, you can label those as training, and you can take those as a deduction. So all your classes that you're taking to educate you to help you improve your business, you put in the other expenses, okay? And on that other expenses, there's categories down here where they would all go, okay? So you can list all the special items that aren't in that front area. You put them down here in this second, and in these areas.
Okay.
Okay. So now let's go to talk about your car information, because in here they ask you like your business miles and your commuting miles, because if you work out of your home, all of your mileage is business mileage, because the minute you leave from your home,
okay,
you're leaving to go to do work, right? So that mileage is 100%. You don't really have any commuting mileage because you work out of your home. So you don't have to pay for commuting.
So anytime I'm leaving the house to do something work related.
Yeah. You wanna track that. Now, one of the things that I just learned of, because I started using Mile IQ to track my miles. So Mile IQ is an app on your phone. And it'll tell you, like, it'll keep track of every time you get in and out of the car and where you go.
Okay.
You can swipe it to the left. It's for personal. You swipe it to the right, and it categorizes it as business. And then you can go in there. You can go in there and track it. Now the app was like $45 for the year, and what I learned was that you can get like I need to register it, but for me, I can get that for free, and then my clients can get 20% discount on it. So I just need to go back in there and register it, because I just recently tried it, and it's like, it's okay. I mean, I still like to keep my pencil and paper, because I keep a log in my car.
Right.
Just so that in case I forget to, like, if I don't categorize my miles right away, I might forget.
Right.
So I keep a log on the side of my car pocket to tell where I went as well.
Okay.
Okay. But that's why, because that's one of the most abused areas of your taxes on a Schedule C, because people will say, oh, I drove 15,000 miles, and the IRS wants you to have some kind of a log, who you met, where you went, what's the purpose, and everything. And the same with your meals and entertainment. You need to write down, like, who did I go out to talk to? Because like every time you go out for coffee and meet with somebody or potential client, you need to write down who you went out with.
Oh, man.
And stuff like that, because the more documentation that you have, then if you ever get audited by the IRS, you provide with all the documentation, then they're satisfied.
Right.
If you say, well, I don't have a log, and I just estimated 15,000 miles. Well, it's like, how do I know that was all business, or some of it was personal?
Right.
Okay.
Okay.
So those are some important things. Let's see. And then your office in the home. Okay, that's the other thing. Like office in the home, that used to be a highly contested area too, because like if you have a room or a specific area dedicated to just your work, okay, because they don't want you to say like, well, I do my work in my living room, but the rest of the time we sit in the living room with the family. Right?
Right.
It's not dedicated 100%, then it's hard to take that as a business deduction. Whereas like my office, I have my whole living area, my living room, it's all dedicated to my office. Like there's nobody, you can't go in there and just sit down and enjoy stuff. It's like a desk and chairs and computers, right?
Okay.
So I can take that as a dedicated office area. Okay. So in here, these are your expenses that you could use for the business, right? There's a form that you have to complete for your office in the home. But they ask you like your square footage of your office. So even if it's a tiny area, like you have your computer and your desk and everything set up, it may be 200 square feet.
Mm-hmm.
But you take that square footage based upon your overall square footage, and then you say like it's 10%. Okay.
Right.
You could take 10% of your mortgage interest, 10% of your property taxes, 10% of your utilities, and all of that. Okay. That's for if you have a lot more expenses to operate your home. But say for you like you're using a smaller area, what they allow you to do is just take a flat fee.
Okay.
And you don't have to account for anything. You don't have to keep track of your utilities or anything. It's just a flat fee. Okay. That's what they call this simplified method. Okay. You just take the square footage, and then they allow you the maximum of $1,500.
Okay.
And so you might even be able to get a deduction where you're not normally wouldn't, and you still get a deduction because you say like 100 square feet of your home is used for the office, and you don't have to account for it. You don't have to provide receipts or documentation or anything. Okay. Okay. So once we understand that we have these categories, right? Now we want to go to, say like we haven't put our expenses together at all. We just have a box full of receipts. Okay.
Right.
So here's a good way, if you don't have your accounting software, what you can do is go ahead and set up the spreadsheet. And I usually do like I will put like the date. Let's see, check number. If you wrote a lot of checks, or if you do debit cards, whatever, we can identify those there. And then we put the amount and description. Okay, and then say, for example, based upon that Schedule C that we saw, like they had bank charges, advertising, office supplies, taxes, what were some of the other categories, like postage, telephone. So these are telephone, and then meals. Okay, so then we would go in here and we just go through each of the receipts and say today is the 10th. And we actually paid cash for this, and say we went $25 and we had Starbucks.
Mm-hmm. $25 in Starbucks. Wow.
Well, we bought a gift card, but
oh, okay, that's cool.
Okay. So we could put that over here in the meals, right? But as we use up that card, this might not be the best idea, but like as we used up this card, or say now let's do this. We'll change this to $5. Okay. Okay. So on here now, on that receipt, I need to keep it, right? But on the back side, I need to write that I had coffee with so and so.
Okay.
To discuss whatever. Okay.
Okay.
All right. So then, say like, let's see, 215, and say we wrote check number 1001, and it was like $150, and it was to the city of LA. Okay.
Mm-hmm.
And that was for taxes. So now we're going to put that here. Okay. So, oops, 215.
Yeah, so this is just like you're sorting
everything. Yeah. Right, because then, so say like now I'm going to total these up. I'm going to hit the auto sum, and it's going to sum the total, right? Mm-hmm. Then I'm going to take this, highlight this. If I go to format, copy, and then do this all across the bottom, then it will total all of those.
Mm-hmm.
Okay, so now what I'm going to do is I'm going to take this 150. Now, say like if I do this month by month, I've set up another template for you to be able to go in and do this on this sheet here. I would enter the 150 in the taxes for January. Okay, so here I would go, I don't have one for here for taxes, but I'm going to use this one here because it's similar. Okay, so then I'd put the 150 here, and then I did the meals and entertainment. I had $5 here, so I would drop in the $5 here.
Right. Okay. Yeah,
okay. All right, and then so then you total that across for the year. Okay.
Oh, that's easy. Yeah.
Now that total, then this total here. So we're gonna total. Let me move this again here. Okay. So as we total this, right? Now we're gonna take this 150 and drop it into over here, right? So we do the 150 here.
Okay, got it.
Okay?
Mm-hmm.
All right, so now that takes care of that. Now,
So that means we can just start doing our taxes now for last year.
Yes.
Why wait till April?
Exactly. Because, and the reason is, and that's a good point, because the reason is, this will give you a good picture of how you did on your business last year, right?
Right.
Now you're at the start of January 2017. It's like, oh, wait, I spent way too much on going out to eat or work or meeting with people, and I got no return on it, right?
Oh, yeah, totally.
Right. So now, like, you'll look and say, okay, what can I do differently based upon my living, what I need to live on, and what I need to make, right? So here I set up another template here. Sorry, my son's deciding.
It's okay.
So these two kind of worksheets need to go hand in hand, because what I would like you to do is also figure out, what do I have as my monthly expenses that I absolutely cannot live without, that I have to have, right? Because there are certain things where, like, you have to have rent or mortgage, right?
Mm-hmm.
Now, I broke this out into as a monthly expense, right? These are kind of odd, but I just did this, and I'm going to upload this template up to the Wealth Builders in the file section also.
Okay.
So that you can download it, and then you can enter those in. But everything that's in the highlighted, what it will do is you'll enter these in, and it'll subtotal it up here in this column here, because this will tell you how much you absolutely must make in order to survive monthly.
Okay, got it.
Okay, then what I need you to do is see this self-employment for your business. Okay, this would be basically down here. You're building this in here, that total that you get here. This is going to tell you how much you can take out of the business to support you on your personal side.
Right.
Okay, but and also then you've got all of these other operating expenses that you have to have from your business. Okay.
Right. Mm-hmm.
Then that tells you how much money you have to make up here. So it's kind of like you're fitting all the pieces of the puzzle together, but you have to do them in a certain order in order to get to the final number of, I need to make this amount of money in my business.
In order to survive.
In order to survive and not have to go in debt.
Yeah.
Or not have to scrimp, and rob Peter to pay Paul. Okay?
Right.
So it'll help you. So then once you get to this part of your how much money do I need, now we can look at, based upon your past last year, where did you make the most amount of money? Mm-hmm. And how was it easy or difficult to make that money?
Right.
Right? Because then now you can say, okay, going forward, this is what I want to focus in on.
Right.
Because the more you focus in on one area of your business, the easier it gets, right? Because now you're streamlining your productivity so that you're not having to, like, say for example, if you're doing a live event and then you're doing a Facebook ad, or you're doing one other thing,
Right.
right? Instead of doing 3 different things, now you're going to concentrate on one and do it really well, and it'll be easier because you're doing the same thing all the time.
Oh, totally.
Okay,
Okay.
so that'll help you in your business as you go forward.
Okay.
Now you've got a plan, right? And now you can then, as you tweak it each month, because if you're following through and doing this every month, this can start to change.
Right.
And then you can start to build in, oh, I can start investing, or I can start saving, I can start planning for bigger things.
Right. Okay.
Does that make sense?
Makes sense.
Okay.
That was a lot of
So,
stuff.
I
That was a lot of
know.
stuff.
I know, but I think if you concentrate, just do the business stuff first,
Yeah.
and then get all of those totaled, right? And then go back and look at what your monthly expenses are. And
Okay.
you could pretty much do the same thing like this on your personal.
Right.
There's no reason. I mean, this thing you could start this in this doing your personal, and then moving it into this so that you could see.
Right.
Because this is more of a template for like budget.
Right.
Like you can do this for your budgets.
Yeah, that makes sense. So you have a outlook ahead of yourself.
Yeah, because you forget how much money you actually spend.
Yeah.
You kind of like you're keeping it up here, and rather than every time you put something up here, it takes away your energy of concentrating on other stuff.
Right. Okay.
So that way you can just sit down and look at it every, once a month, or like if you have a lot of activity, I'm going to recommend that you go through it like once a week.
Mm-hmm.
Mine, this was bad. Like I'm taking care of everybody else's expenses, right, instead of my own. I went through over the holidays and I entered in all of my stuff, almost a half a year's worth of stuff, and I said I don't want to do that ever again.
Oh wow.
One of the things that what I did, this actually I started back in November, was through the QuickBooks. You can actually get bank feeds. So the bank feed you'll link it up to your bank account, and actually you can download that information into QuickBooks. So if you hate the data entry,
yeah,
this helps you actually budget and really see where you are. But once you get to a point where you're actually really busy and don't have time to do this record keeping, downloading it and having a bank feed actually save you a lot of time.
right.
Now, those are some of the more sophisticated things that I can show you later on as you get more established and get all of these things, because it's almost like you can't learn to walk or you can't learn to run until you know how to walk.
Makes
right?
sense. Mm-hmm.
Yeah, so the more sophisticated you get, then I can show you like time saving techniques and stuff like that, because as you grow your business, you want to start making things more efficient for you to run. So like even developing contracts, like you have a template for all your contracts. Anytime you have a contract, it's there, and you know where to find it, and the procedures of what to do when you bring on a new client. Okay?
Right.
Because those, like say for example, if you have it all up in your head and then you try and train somebody, now you've got to take the time to show them how to do it, rather than give them a video or a manual to know how to do it.
Right. Okay.
Okay.
Good. So this is a good training for just somebody who has their stuff already calculated from 2016. They could get their taxes done already for this.
Right. Yes.
And then get started on creating a habit of tracking your data, your numbers for 2017, so that way you're not left behind.
Yeah.
Yeah.
Now, one of the other things that is important for you to know is because a lot of times the sole proprietors, if they did make money in their business, they're going to be surprised at the end of the year or in April because they're going to have to pay taxes.
Right.
So this will help you get a head start on it so that you'll know that you're going to have some money coming up to pay the taxes. Okay. So one of the things, let me show you on that Schedule C. This bottom line here, this number here is your net profit, right? If you just automatically calculate 15.3% of this number, that'll give you a really good idea of how much tax you're going to need to pay. Okay? Because whether you have other income tax due on your personal or just this business, this is the only one that will, no matter if you had a loss or no, I mean, if you have a loss on here, it's not going to be a problem. But if you made income, you're going to have self-employment tax. And that self-employment tax is the 15.3%.
Okay. And then, what was I going to say? Is this, so people, I always hear people talk about doing taxes every quarter. Do you have to do it every quarter?
Yeah, see that, and that's the thing. Yes, it's ideally you should be paying every quarter, because can you imagine if you made like a $50,000 of income there on line 31 is probably going to be around $7,000 or $8,000 of self-employment tax.
Oh
And
my God.
you don't want to have to come up with that at the end of the year. So if you pay it in quarterly, then it breaks it into smaller bits of tax.
Is there any how do you as a self-employed person, how do you reduce the amount of how much you owe back? Is it or because you are self-employed, will you always have to pay?
No.
Will you always have something to pay back?
Well, okay, that's the more sophisticated stuff that we get into with the tax planning.
Okay.
And that's why, like, if you're tracking your business, right, and throughout the year, you'll know, oh, I'm going to have a tax problem. Don't wait until the end. Like, you start, if you made a really good, let's say like your first quarter, you're already at $25,000 of income, right? It's like, okay, how do I get that 25,000 down as much as possible down and still having money in my bank account without me spending it on taxes or something else, right?
Right.
So I teach the entrepreneurs on how to look at what's a good expense and what's a bad expense.
Mm-hmm.
Right? There's a point where your money is a good investment where you're reinvesting it into your business to help your business grow, or there's areas where you can spend it and it'll be a good investment, but it'll take away not as much on your taxes, right? So one of the things that people like to do is they will go out and invest in equipment. So like if you invest in a new computer, right, it may cost you $3,000 for a computer, but it's all deductible.
Okay.
Right.
So that will probably take away from having to pay back so much.
Yes, exactly. Yeah. So, or if you go on, you decide, okay, I'm going to take my continuing education and I'm going to pay for it all up front. If you pay for it all up front, now you'll get the deduction in the year you pay it, not in the year when you take the class. Okay.
Okay.
So say like when we did our Thrive, right? We could pay it all up front, right? Or make it in payments.
Right.
Right? So if you could afford to, you would pay it all up front so you could get the deduction in that year that you enrolled in the course.
Right. So like last year, for example, I was making monthly payments.
Right.
Yeah.
So you'll get to deduct the monthly payments that you made.
Okay. So what if someone's expenses is actually more than their actual income?
Okay, so if that's the case, they're going to have a loss, and then they wouldn't have any self-employment tax. Okay? But there's a part of it where you would actually, if it created what they call a net operating loss, you actually get to use part of that in the following year. Okay. So it's like in 2016, and you had a net operating loss, then that net operating loss, you could either, they call it either carry it back to the previous years or carry it forward to the future years.
Okay.
So that's
Yeah.
a possibility.
Okay.
Okay.
All right. So like double checking.
Yeah.
The other thing is, I don't know if people can see our faces right now, but what was I gonna say? I had a
I
question.
can stop sharing. Here, let's.
Okay.
Okay. There we go. Okay.
So what if someone is like, they get sick and they can't work and they're self-employed?
Uh-huh.
What kind of benefits are they? Do they get any benefits for like? Because I know if you're with an employer, you get disability if you get hurt, or if you
Right.
get laid off or something, you get self-employment. So
Right. Right. Unemployment tax. Yes.
right. So if you're
As a sole,
self-employed, what happens if, say, you get hurt, or say, what if something happens and you lost your job, like your business? I don't know.
yeah.
What
So
benefits do
as
you
a
have?
as a sole proprietor, you don't get anything. You
Right.
have to set yourself up. So like that's why the sole proprietors will like they'll invest in like disability insurance. They have to buy their own separate disability insurance, or they'll have to buy. They invest in other things. So that in case they do get disabled or their business doesn't do well, that they have other sources of income to tap into.
Okay.
Okay. Now, if you would decide and your business is doing good, but then you hit a bad year or whatever, right? If you are incorporated, you have you as a corporation, they've been paying in unemployment tax because you've been drawing a salary and you get a W-2, right?
Right.
So they're actually contributing to the state unemployment and state disability. So they can actually go to the employment development department and claim for unemployment. If they got laid off or the business closes, they can go in and claim that because they paid in money to the system.
Right.
And because if they get disabled, they've got the money to tap into the state disability.
Okay.
Okay, but these are some things that you have to take precautions. So as you develop, you want to set aside things like that for those kinds of life what do they call them, life crises or whatever. So
Yeah.
that you have savings set aside. So they tell you to have like 6 months worth of living expenses in your
Right.
savings account. So
Right.
that you can handle those things.
Right. Makes sense. Wow.
Okay.
Lots to
Yeah.
do as a business owner.
It is. There's a lot to know. I mean, there's so much. There was a lot of things. I'm going to post up on the on that Wealth Builders in our Facebook page all the tax law changes that have come through as well. I mean, there's so much more, but I did the highlights of a lot that are applicable to most people.
Okay.
But there's so many little specialty things, some of them are for like retirement, some of them how they affect your IRAs and the required distributions that you take and so on. So there's so many other things that are applicable, but for the entrepreneurs, the ones that I'm going to post are the changes that will affect most of the entrepreneurs.
Right.
Okay.
Okay. Cool.
Yeah.
That's a lot
Yeah.
of information.
I
But good
know.
information.
But I'm hoping that, yeah, I mean, because you're seeing a whole different light of how you operated last year, right?
Oh,
Versus
totally.
this year. I mean, it's opened your eyes to a lot of things.
I feel like I should just get an assistant. And have someone do it for me.
Well, and the thing is, like, the main purpose is for you to learn how to do it, but
Yeah.
you don't have to. As long as you know what you need to do, you don't have to handle it, right? But you
Right.
just know you just have to be aware of it.
Oh, totally. Yeah. Aware of it and know how it all works.
Yeah.
Yeah.
Because that's the most important. And then if you don't like the bookkeeping, then go hire somebody who can do the bookkeeping for you.
Yeah.
Right?
I'll get to that place eventually, but
Yeah.
I can do everything on my own. So
Yeah. And it's not that difficult because the more you manage your own finances, the more you're equipped to be able to make better decisions. Because if your bookkeeper told you, oh, well, you spent this much and this much, it's not the same feeling, right? As when you have to key in that number, and then you push the button and you look at the total and it's like, oh my gosh, I did that. I spent that much money and I shouldn't have, or I should have invested it in this place. Your bookkeeper's not going to be able to tell you that.
Right. That's true.
Yeah. So you have to feel that emotional part of it and deal with it before you can move on.
Yeah. That's a good
Right?
point.
Yeah, trust me, it's not scary. I had a piano teacher that I used to work with, right? When I first started working with her, she said, when I first started working with you, she said, I couldn't go in my office and I couldn't look at the computer because I knew it was just too scary for me.
Oh.
And she said, after it took me a while to get her over that, but as I started to work with her, she goes, I'm not afraid to come in here anymore. I can open up my books and I know exactly what I need to do.
Oh, good.
So that is my goal, to be able to empower people to say, you know what, I'm not afraid of my finances, and I know how to correct them if I get myself into this situation.
Right. Yeah, thank you. Yeah, it's being knowledgeable, and because once you have that under control, it's not scary. I mean, if anything, it's smarter.
Yes, and you'll make like I think it raises your confidence in business too.
Yeah.
Because people are saying, oh, she knows what she's doing.
Right.
You know, she's got her act together.
Yeah.
Right? And you'll know your numbers. Like, I have to adjust this and this in order to make this work.
Mm-hmm.
So when it comes time for you to make an investment decision, like, okay, you'll say, no, not this month. I already spent my budget on, on education, so I can't do it this month.
Right.
Instead of, well, I don't know, let me see if I can do this or not. I don't know where I stand, but we'll give it a try, right? Yeah.
Yeah, cool. Thank you.
Yeah.
That's all my questions for today. I'm going to have to do my practicing of logging in everything. So
yeah,
I might as well get my taxes done now.
You might as well, because if you get them done now, you'll know exactly how much money you have to make for your taxes. Like I said, hopefully you've made money, but not so much that it's going to devastate your financial stuff this year.
I know. Yeah, totally. I mean, it just makes sense. Like, once you have the information, you might as well just get it done now. And then it'll help you for this, the beginning of 2017.
Right.
Make smarter decisions for yourself and your business. Yeah,
you'll be ahead of the game.
Yeah. Okay, cool. I guess we will talk about the next thing next time. Yeah. Whatever that will be. But
I guess all depends. Like, will you have to do 1099 forms? Do you know of anybody that you might have to issue one to?
No, I haven't hired anybody yet.
Okay.
Yeah.
Okay. Well, you'll let me know then
unless it's a coach, what if I had a coach that gave me, say, for example, a VIP day that was more than $600?
No, you would have had to pay her.
Yeah.
If you paid her more than $600, yes, yeah, you would definitely. The coach. The only time you don't have to give a 1099 is if they're incorporated. Okay, if they're not incorporated, and you might have to ask them. One of the things, you know what we could talk about next time is how to choose your tax preparer and know the difference.
It's a good one.
Know the difference, because I come across a lot of people who don't know the difference between a bookkeeper, a CPA, an EA, a tax attorney.
Oh my God. Right? I have no idea what you're talking about. I do know.
So that would be a good one, because it'll be like next month we could talk about that, because how to choose one, how to choose the right one that's going to work with you.
Right.
Okay? Because there are so many times that people don't know that the difference between a bookkeeper and an accountant.
Right.
People don't know the difference between an EA, which is an enrolled agent, and a CPA and a tax attorney. And there's different levels of their knowledge and expertise. Right. So you want to pick the right one who's going to work with you to help you grow your business.
Right.
Okay.
Okay.
So then you'll start to understand. And then maybe if we could do, I think what I want to do is do, I don't know if I should do it with you or just upload a video, but on how to do QuickBooks, on how to set it up and get it running and how to enter the data. What do you think?
That could be useful too. I mean, if people feel that it's going to be helpful for them to get training on QuickBooks, and that could be cool.
Yeah.
Yeah.
Okay. So those are a couple.
We can ask people in the Wealth Builders group too. So yeah.
Okay.
Okay.
Yeah, because those are some things as I started to work on it, because I want to use these like a lot of this training stuff is to help build my develop an online course for training.
Yeah, that would be great.
So
okay.
How
about we just end this video for now? We can continue chatting a little bit.
Okay.
Hope everyone enjoyed the video. And if you have any questions, you can contact Nancy.
Okay. Either Nancy at crystalclearprofits.com, or like I said, you can check me on my private my Facebook group, the Wealth Builders Inner Circle.
Okay. Cool.
Yeah. All right.
All right. Thanks.
Thank you.
Thank you.
All right.